Hello everyone. I am sorry about the microphone. Um, can you guys hear my voice right now? Oh man, I did it again. I forgot to turn on the microphone. I was talking about really good stuff, but all of them were gone. But that's okay. Okay. Good morning, Money Glitch. Good morning, Misosa. Thank you for microphone warning. If you didn't warn me, I would still be talking to myself. That's ridiculous. Good morning, Andre. Did I pronounce that correct? It would be better with sound, yes. It would definitely be better with sound. I'm sorry about the audio, guys. Hello, Mr. Everglow. Hello, Imat. Thank you. Thank you for your kind words. Hello, ICT SMD Crete. Thank you for your message. Man, I was just talking about the price. I was just talking about why I didn't take a setup yet, why I am waiting patiently. I was mumbling by myself. Okay, uh I wanna create a summary, quickly talk about what I just talked to myself about. I simply mentioned that there was a huge expansion on Thursday, and we talk about this pretty much every day, right? Our time frame is just consolidating. That's a simple reality, right? We are not trying to force the things we learned on trending markets. I mean, we all learn from some kind of educator on the internet, and most of the educators teach us the trending markets. They teach this and this. If they are going to teach manipulation, they add something like this. Here's your liquidity sweep, right? They teach us as if market only trends, as if market never consolidates. Even when they talk about the consolidations, they just briefly mention it, right? They don't talk about the dynamics and characteristics of consolidation too much. I don't know the reason why, but I see most of the educations like that. So, as we can see, there's a consolidation over here, and there is a certain aspects, certain characteristics of consolidating price action, right? I mean, this price will not behave like this forever. There are many aspects, many things that influence the price behavior, and one of them is seasonality. I mean, we can, if we look at the past data, we can easily see that price expands more after the second quarter of the year. That's a well-known fact. I mean, after the March, during April, May, during the months like that, price probably will be more volatile, and that volatility will create more expansions and wider ranges and more continuations. For example, let's look at this price action from last week's, right? We see a consolidation over here. We see some liquidity sweeps, consolidation, then reverse back lower. Price expands hugely on Thursday, but then decides to give a break on Friday, and then reverses back on the next week, right? And I was talking about that same thing might happen today either. Not because of the recency bias. I believe we should try to avoid recency bias at all costs. We are not considering or being cautious about a consolidating day just because price did the same thing on the last weeks. We are being cautious about a possible consolidation because of the current price conditions has not changed yet. Conditions are the same. Price is range bound, expands a little, takes out some liquidities, consolidates a little, reverses back lower, consolidates a little, things like that, okay? I mean, when we look at this price action, we can see price just going like a ping pong. So price went above and the week is almost over. So today price might bounce, might be choppy. I was just talking about those, and I also talked about the objectives of every single day. For example, Monday opened, expanded a little lower. Who caught this Friday low? I mean, Monday went lower to take out a previous day low. Then Tuesday reversed back higher. Wednesday kept going higher to take out some liquidity. After Wednesday grabbed the liquidity, placed the high of the week. Then we saw a midweek reversal over here. We saw this gap. We saw this repricing lower, but we were not sure about that midweek reversal. After we saw that price expanding lower, we just targeted the weekly gap. I mean, every day had an objective. Monday did its thing, Tuesday did, Wednesday too, and Thursday did its expansion thing, and currently higher time frame is consolidating, and we are on a Friday. So if there wouldn't be a huge news or unexpected event, I'm not expecting a significant big breakout today. So when we look at the chart, price just swept the previous day low, hit that weekly gap level once again. As you can see, you check out this wicks, this weekly gap has got some kind of importance, right? We can clearly see that. Price tapped that once again. So instead of trying to short this price action, I just wanted to wait and see what this price is showing me. I also talked about the pattern recognition ability. We all have that ability. We all look at the charts, we all backtest, right? We take trades, we fail, we succeed. It doesn't matter. What matters is the more we look at the charts, the more we study the price action, the more things our brain processes. Our brains get data, right? And our brain has got a pattern recognition ability. So instead of jumping into trades right after the opening bell, I wait, watch the price, and try to see if my pattern recognition ability shows me something without me forcing it. Okay? Sometimes I just cannot see anything, cannot understand what price is doing, and I just sit and watch. And as I watch, my feelings start to kick in. My feelings start to tell me something about price action, right? And during that, I might get an opportunity to find a nice setup. So I believe especially today is one of the days I should be patient, because um, the setups we took on this week ended up with profits. We started this week with minus $500 minus, and Monday was a winning day, Tuesday winning, Wednesday was a losing day, and Thursday again was a winning day. So if I close this day on a big loss, if I blow this account, I am going to enter into weekend with bad feelings, right? I will feel myself maybe awful, maybe a little down. It doesn't matter. I won't feel myself good if I blow this account. Not because of the money I lost, but because I will be guilty for ruining my own process, right? So if I enter this weekend, if I close this day on break-even, if I don't take any single setup, I mean, if I see a setup, I am going to take it. But let's say I just waited and price just went without me. Price surprised me, expanded. If price makes a huge expansion today, I would most definitely be surprised. I'm not going to lie. And believe me, price surprises me a lot. So if I enter this weekend with break-even, I will enter the weekend with a peace of mind. If I enter the weekend with bad feelings, I will have a tendency towards avoiding that bad feelings. I will maybe want to scroll on social media more. I will maybe want to distract myself with unproductive stuff, right? But if I enter the weekend with more positive feelings, that positive feelings can create some momentum. I might feel more productive. I might backtest more. I might study more, journal better, things like that. And that would affect my next weekday either. I mean, next Monday and then next trading days. I mean, I am trying to protect my well-being, my state of mind. My mental health is the most important priority for me. If I can protect my well-being, if I can protect my sanity, I can protect my momentum. By momentum, I'm talking about the growth momentum. So I can learn more, I can improve myself better, and I wouldn't be actually missed anything, right? So I'm still patient. I talked a lot. So let's get back to the charts and observe what is going on around here. Okay. First of all, I want to mention that overnight session liquidity sweep. This was a nice range. Price swept this liquidity, tapped this, exhausted some short orders over here, right? This is a perfect dynamic resistance level. Price definitely grabbed some nice short orders from here, but exhausted that. Limit sell orders, went back lower. Maybe sellers around here took profits, maybe they didn't, I don't know, it doesn't matter. What matters is a nice consolidation area was swept and then price reversed back higher. When price was reversing back higher, price left this little sequence here. Price reversed back higher immediately after sweeping this one, right? So inside of this range, price swept here, left a tap, but price didn't sweep this tap, probably because this tap was in a key level. on this range high, this 5-minute range high, close to the opening price, right? So price, this is cash open. Cash open simply means 9:30 open, and price is staying above it, which is a bullish sign. Price is currently net long, and price swept this once again. So I am not rushing because price is not rushing either. Normally, I would just place my buy stop order here. Let me show it on paper trade, right? Wait a second. How am I going to open the paper trading section? From here, right? Now let me check the paper trade account from here. Stream paper. I will place a trade the way I normally place on paper trading. Let's say 3 micro long from here. But for my evaluation account, I am not rushing, and I will explain just in a second why I don't rush. After this candlestick closes, I will trim my entry here. And I am seeing a double bottom over here. I want to see this candlestick closing. Now I can open a setup on my funded account too. I will explain the logic just in a second. This is my buy stop market.
Order submitted.
On this level. Let me measure the size of the candlestick. Okay, I think 3 micro is okay. No need for a huge position. If this starts expanding lower without taking my entry, I'm canceling the entry. If this takes out the entry and then stops me out, I'm waiting in sidelines, maybe for a combo setup, which is the fractal sweep that we were talking about. I like that inside candle. Price made another low. If I see a strong closure, I'm canceling the entries. I'm not even taking a paper trade if this leaves a strong candlestick, leaves an imbalance. I'm not rushing, okay? I will now cancel
Order
this entry
canceled.
because I gotta measure the size of this candlestick and I wanna see if price leaves an imbalance or not. I honestly didn't wanna see this low getting taken, but it happens during the slow days. I will explain the logic step by step. Now, if price, especially if price leaves an imbalance, I will be watching this low. And I will explain that reason too. When price starts doing its boring stuff. Okay, no imbalance here. Buy stop market from this
Order
high.
submitted. Order filled.
Oops, I forgot the
Order submitted.
sell stop order in here. Price already made multiple lows. It made a triple bottom. I don't want to see another sweep over here. If it makes another sweep, I don't know how much bottoms it would make. So if my stop gets taken, I'm just waiting on sidelines to see what price is doing and to see if price makes an internal reversal back up, a fractal reversal, and then a fractal liquidity sweep. But if it keeps going higher, well, then great. It's a small position. I think it's hit the 1R. Yeah, almost. Just give me a second. Alright, I'm back. Let's check the ES chart and see what it is doing. Looks similar. It has got an imbalance here. Nasdaq doesn't have the imbalance, I believe. Yeah. Nasdaq looks better. By better, I mean more bullish. I would like to see price coming and tapping this level. Now, I didn't like how this looks. This might very well take my stop loss out, but I'm not very worried because position is pretty small. Just 3 micros and stop loss is not so huge. Maybe I could have taken one partial over here. Maybe not. It doesn't really matter. It would be nice to see this failed swing over here and price going back higher. I believe price is not taking my stop loss before sweeping this high. So if price sweeps this and comes back lower, it might take my stop loss. But if price closes above this high, then it would probably keep going. So today I am going to prefer playing it more defensive and take just one partial here.
Order submitted.
Just to make sure that we get our partial on 1-to-1 once again. By 1-to-1, I mean for this 1 micro, we risked 28 points and we target about around 28 points, I guess.
Order filled.
Yeah, we took a little partial over there, $57. And if we get stopped out on rest of the position, we will lose around 100. So we could keep trading. We could keep waiting for the next setup, right? ES looks really weak. We might see some kind of divergence on this high over here, and if I see that divergence, I might take one more partial from Nasdaq too. I think it would be close to... I think I lost the connection for a second. Okay. I want to mention something real quick, then I will come back to the chat and look at the answers. You see this sweep over here? This now became a new tap low. So I'm going to trail my stop loss to break even for the rest of the position. I don't want to see price taking out this low. So this low is a better invalidation level, and 5 points would be $10. It's not a big deal. Even if it was $10, instead of putting break even, I wanted to place my order to a structural level. Because if price didn't take out this high, this low would be a nice fractal sweep level. But currently it is not a fractal sweep level. It is a weak low because of this sweep. I mean, price either, I want to see price either leaving this low without taking it and coming back higher, or I'm out. If price is going to do something like that, I don't want to be inside of it. But as I said, if price didn't take this high over here, I mean, if this was something like that, for example, if this was something like that, then I will treat this as a fractal sweep low. I wouldn't trail my stop loss over here. I would keep my stop loss here, and I might even add to my position from this level. But right now, I trailed the stop here because why? If this is a real market structure break, okay, listen to this part carefully. If this is a real market structure break, then this is the demand area that caused or created that market structure break. You know that SNDR responsible term? This simply means supply or demand responsible for the break. This is what SNDR means. SNDR. Simply the support that broke the high. This is that simple, okay? And if this is a real break, then I would like to see price not sweeping this. Of course, there are some occasions in which price sweep this and goes back higher. But I don't care about those occasions. I care about the probabilities, okay? This is a more rare occasion, so I don't care about that rare occasion. I care about the repeatable stuff, and I have seen this many times, okay? It's better if price doesn't sweep it. And if we check ES likely took this low over here, 1022, because ES has had an imbalance over here, and it was the weaker pair. Let's check this one. See that? ES swept this low. Nasdaq did not, because when it was dropping, Nasdaq was dropping slowly. It was standing more firm, standing stronger, and ES was leaving an imbalance. This is a sign of more weak price action. And if we look at here, ES came back to this level, made a deeper retracement, but Nasdaq did not. It did not touch this level. So as you can see, Nasdaq already completed the sequence. This is a completed SBS, right? Swing breakout sequence has been completed, because this is what? The 6th sequence. As soon as this completed, this became a new tap low, right? If price takes out this one, I would consider that the probability of this low being taken is getting higher too. So if price takes this, I don't want to be in trade. If price sweeps this, shakes me out, takes my stop loss, and then reverses back higher, fine. I am going to find another stop, another setup, right? It's not a difficult thing, as you can see, if we stay patient enough. Price always gives. And as you can see, ES is currently creating a fractal setup. Normally, this is a lovely long setup. This one over here. Normally, I would really take this setup, right? But we have got a divergence on this high over here. Nasdaq already took this one. And I don't really know if ES if this guy is going to reverse back lower after this divergence. Sometimes divergence play out, sometimes they don't play out. But if there is a possibility that this divergence might play out, then probability of this long gets lower. So I'm not going to take this long on ES, and I don't trade ES. I feel lazy to change it from here, honestly. So that's the main reason why I don't like to trade ES. It seems like our last partial is being shaken. Maybe it might keep going lower, maybe it might take the stop loss, but it doesn't matter. We already took some profits. It is something. It's better than giving everything we took on the week, right? My main objective for today is just surviving. If I can survive, doesn't matter how small it is. If I can end up days like this in profits too after a day like that,
Order
right?
filled.
I traded this day successfully. I managed the position. I didn't get tilted. I took my profits and my brain was just hyped up on this day. By hyped up, I mean my brain saw that strong momentum, saw that dropping lower. When I first started trading, right, I would constantly click market sells from these levels. I would click market sell, market sell, market sell. Why? Just because it dropped like that yesterday, I would think that, oh, price is bearish, so I gotta sell. I would sell, then price would take out my stop loss. Price would shake me. I would then tell to myself, oh, I was wrong. Just because it went yesterday, it went lower yesterday, doesn't mean it will go lower today too. Maybe it is just reversing. I was wrong. Let's take a long, and I would click long from these levels, right? Or maybe levels like that. So my longs would get stopped out either. I would get really frustrated. Okay, ES is printing the combo of a combo. I'm going to take a paper setup on ES to show you guys. Normally buy level would be here, so let's leave a limit order. I believe price might take out this level because it's really slow. Normally, if price was fast, I would click market buy from here, but since it's been pretty slow, I just wanted to click limit order because I know this is not going immediately. It's going to be slow. It's really simple actually. It's been slow, so it might keep being slow. It's that simple. Just knowing this helped me to get a better entry. I took this setup just to show you guys. And it seems like a nice setup. A partial might be taken on 1-to-1. I don't know. Let me forget about it and come back to Nasdaq. Price took my stop loss. I mean, if Nasdaq didn't sweep this high, this would be a lovely combo setup entry. But just because Nasdaq took that high, I'm not rushing another long setup. I'm gonna wait. I would ideally want to see price taking out this low, maybe even this one, right? I now want to explain why this low if we follow the structure. Overnight session liquidity. The liquidity has been swept. The objective might be completed. We don't know when this occurred. We don't know if the objective has been completed when this first occurred, but after seeing this and price going lower, we know that objective was completed over here. And after this one played out and price kept going lower, we can easily see that objective on here completed too. Why? Because liquidity, lowest liquidity swept, a potential reversal, the first ever tap low, tap liquidity, this low over here, price takes out that and then reverses back higher, another high taken, another retracement inside the range, right? This one didn't, this one wasn't taken, price went back higher again, took this high, little retracement here, another here, now price took those, swept a new high, now these two are the things I'm watching. If price doesn't take this one and keep going lower, keep going higher, then I will say that this was simply the place price wanted to leave blank, leave untapped, untouched, just because it was on a critical level. It was on a decision point. So this SPS worked pretty well. I believe that, yeah, ES is taking the profits. Let me show it once again. Oh, why don't I open this one? Where is my paper trading account? It's right here. It went shy. Couldn't take the high. That's fine. If this was a live setup and I was managing this live, probably I would have closing this setup around here, or at least taking some partials. So I will take a partial just to show it. Price might keep going higher. This was a 2-hour trade. Okay. If we want to manage this price, we can change our take profit level, but still leave a partial over here. That's something I like to do. See, this divergence didn't play out. SPS and overall structure turned out to be something better than SMT, I guess. The smart money technique. All right. Let me come back to your questions. Corey Wellen said, hope you are having a good morning, Jihan. Thank you, Corey. I am having a great morning, and I do hope you are having a great one too. Now, this question was in my mind. I want to answer this. Questions from ICT SMD Crete. Today I took my first SPS model trade on wait, give me a second. 942 candle top. Top of this candle. Can you explain what was your what was your exact analysis for this trade? Was it a long setup or a short setup? I mean, I believe there is no such thing as wrong or right setup. If you have a system that you apply consistently, only you can know that if it is a good one or a bad one. A long setup, okay. Let me remove my drawings and hide my indicators to see a little cleaner chart. We can leave the moving average. So, in my opinion, this is not the SBS setup because this looks more like a reversal setup. Because price is making the most extreme level since yesterday, right? Sweeping the lows, overnight session lows, and then turning back higher. I'm not saying it is a bad trade. I'm not saying it is an invalid trade. I'm just saying it is not an SPS setup on 1 minute chart. If this low was protected, then it would be the SPS setup, because the logic of the SPS is we would have a base, we would have a swing high, a low, price breaks above and then makes the first retracement, the new extreme. This first retracement becomes our liquidity pool, and price comes back to sweep this liquidity. And in order to call it an SPS setup, we want to see this low staying intact. We want to see this low staying protected. Okay? If price is taking out this low and then going back higher, and then we enter a long trade over here, this is not an SPS setup. This is a mean reversion setup. And I believe a mean reversion setup, like a day to day, I mean on a Friday, is not a bad setup, I believe. Because again, higher time frame is consolidating. Price took the highs of this consolidation area on Wednesday, made the midweek reversal, expanded back lower, took the lows of these levels, and also hit these levels over here. So reverse from highs, reverse from lows, get near the range highs, reverse back lower, get near the range lows. These are the range lows, right? Price got near the range lows, got close, and reverse back higher again. Also, higher time frame is consolidating. Yesterday made a huge expansion, so today might very well be a choppy day or slower day, and choppy and slower days makes a lot of mean reversions. So I believe this one was a clean mean reversion. If I was trading mean reversions, I would consider this as a nice trade. But the SPS trade over here is this one. Why? Let me zoom in just to show the logic. If we accept this as a breakout, this little wick over here, if we accept this as our range, and if we consider this as a breakout, this would be the first retracement after the breakout, new high, and now price is sweeping the low without taking our extreme. I saw this, but I didn't take this one because I wanted to see and understand what price is doing, right? I wanted to see price showing me something more, and price showed me something more. Price, as soon as this was the first ever SPS setup of today. As soon as this worked like this, I told myself, well, if this lot worked like this pretty clean, then this next one might give me at least a partial profits, right? And It gave the partial profits. And even if I didn't trail the stop, it would have given even more, but I don't care about it, right? What I care about is I manage my risk properly. I take the higher probability setup because, I mean, when I waited for this, I have seen the bullish confirmation, right? I also seen this moving average crossover over here. So I took the next one and it delivered too. Okay. Mr. Al Ashraf is asking a question. Hi Jihan, I'm in Stoic group. Always nice to hear different perspective. Thank you for the kind words. How many weeks back you marked down weekly gaps? Most of the time it is the last 4 weeks, but if price is away from that 4 gaps, I mean the most recent gaps, let me take it on 15-minute charts and let me open my gap back. Okay, I will only open the, not this one, I am going to open this one. I got 2 separate indicators, same exact indicator, just copied them. Now, this is showing me the last 4 weeks weekend gaps. Okay, these are weekend gaps. The gaps occur during the weekends. If I see that price is close to them and price is respecting them and price is bouncing in between, then that's enough for me. I do not look for more gaps. And in fact, if you look closer, price is just currently using this tool, right? This one and this one. And if we zoom out, price has been pretty much the same on prior weeks using this one and this one. When I zoom out a little, I see that price reversed without taking this one. So this creates a curiosity. Or maybe price would be around here and there wouldn't be any gaps. For example, let's rewind it back. I don't see any gaps around here because all the gaps are above the price, right? So if I want to see additional gaps, I increase the total gap amount. Maybe 8 gaps, maybe more, for example. I don't see any gaps over here. I sometimes make it 10 or 20. Not always, because if charts are always like this, if I leave too much gaps, then it becomes confusing. Confusing, yes. I don't want the confusion, but from time to time, I increase the amount, for example, 20 gaps like this, to see if there's something important over here. And when I zoom out even further, I see these gaps over here and I see that these gaps are on really significant levels. Zoom out a little bit and you see these levels over here, right? For example, mark this low, see this sweep and see this once again, right? And these gaps becomes important for me. So I hand draw these gaps. After I hand draw them, I just close this indicator because I'm not interested these too many gaps. Maybe I might draw 1 or 2 to find the take profit level, but otherwise I just close this one and I will be focused this more. I would maybe draw these 2 or this just to get some idea to find a intraday targets, right? If I'm taking a scalp setup, this could be nice targets. So let's draw a couple 2. Couple more. I like this one because it is near these lows. These lows are key levels for price. So I close this back because I don't want to a noisy chart, a loud chart. And then I look at these levels and try to see if these levels are working properly. For example, when price comes here for the first time, bounces. The smaller gap inside, bounce. Using the levels, bounce. And zooming out, accumulation below it, bounce. Looking at this level, right? Things like that. I mean, almost perfect. Sometimes micro taps and normal NQ doesn't, mini doesn't. Sometimes mini taps, other doesn't. But I don't care about this one tick stuff. This is how I interpret it. For example, let's say I had a bullish bias. I couldn't make a decision around here. I just waited from this drop. I saw this consolidation. I saw that price expanding higher, and then I saw this. And if I start longing around this level, this would be a good target for me. This is how I interpret the gaps, but mainly it is just last 4 weeks gap. That's enough for me. Let me check back the ES chart. Price is coming closer to our entry level. It doesn't really matter though. I wanna see the 5-minute range on the ES2. This range over here. ES reached one standard deviation and then started coming back lower. This could have been a nice partial area. I forget to check this level. As you can see, this is a tap high on 15-minute chart and a high inside of a 15-minute. Price didn't at first step just didn't reach the midpoint, a big imbalance. Second tap hit the midpoint and look at this reaction. So right above this high could have been another nice partial level. Maybe here, maybe this midpoint, I don't know. Doesn't really matter. It's just a paper trade that we took for the illustration purposes, and even if this comes back and takes out a stop loss, it will still be ended up with wins, with gains. Now let me check the Nasdaq. Nasdaq has got this little imbalance over here, receiving some kind of reaction. I am watching the closure. Hourly candle is almost getting closed, and next candlestick is going to get opened. Now I would be cautious from this long idea. I don't know. I really don't want to see price taking the SNDR levels, the supply or resistance, supply or demand that caused break. If this is a real breakout, these candles over here, if this is a real breakout, I would rather see this low is staying protected. If price is going below this low with imbalances, then I will just tell myself, price might be starting a complex retracement. Complex retracement is something that I made up. Imagine something like this. Price creates a zone, breaks higher, makes the tap, and goes higher again. We say, oh great, this is the tap low. Let's open a long position after this tap low. Sometimes price does something like that, comes to the level we expected, acts like a reversal. I take a long setup, price comes lower, comes higher again, I take another, price comes lower, comes again, another long, comes lower. This is what I call a complex retracement. Okay, and these complex retracements occur most of the time after these kind of consolidations, right? Or if the 200 simple moving average is flat like this. I mean, look at this. So price might very well do things like that. This is our long entry trigger, right? Give the trigger, go, went back lower. Or give the trigger, tap the imbalance, come back lower. Things like that, right? Sometimes it gives barely 1 hour. Sometimes it gives less. Sometimes it might just keep going higher. But if I start to feel like this might be making a complex retracement like that, I simply wait for the fractal reversal, but that's not enough because this fractal reversal pattern might turn into a bearish SPS setup. So after that fractal reversal, I wait for a fractal sweep setup, which is something like this, a fractal SPS or SPS combo. Stoic trader calls this as SPS combo. I call this fractal sweep setup because it is actually the same exact idea, but inside of the smaller range. Since price moves fractal and does pretty much the same stuff on every time frame, I like to call this as fractal sweep. Okay, so price might be receiving some reaction from this level, might be tapping this twin SMA and going back lower, might be going above a little and then coming back lower. I don't know, and I don't care. I'll just wait, watch, observe. Now this looks interesting because it seems like ES is creating something close to SPS. I don't know. Since volume is low, the patterns are more difficult to identify. And seems like ES is getting a little stronger than Nasdaq, I guess. I don't know. 1032. Yes. Nasdaq has got more imbalances. Especially during the days like this. Low volume, slow grind, a little choppy, go back and forth, and a lot of divergences. And inside of days like this, first of all, divergence reversals are not reliable. As you can see, it looked like it is making a divergence and reversing back lower, but came back higher. First of all, inside of days like this, divergence reversals are less reliable because price might constantly do them without reaching a significant objective. I mean, this divergence worked at some point, right? This divergence worked until price came to this level. I mean, this divergence pushed the price to this level, but couldn't even make a new low and didn't start a bearish expansion. So divergences are less reliable. Also, the relative strength of indices may change throughout the day. At the beginning of the day, Nasdaq may look a lot more strong, a lot stronger than ES, but then at some point ES might get stronger, things like that, because I believe the reason of this is big players cycling their positions or money. I mean, think about it like that. You are a really big institution and, for example, you are closing a long position on a stock, for example, and let's say that stock is inside of the ES, part of the ES, but not part of the Nasdaq. then you might cause ES to be weaker than Nasdaq because you are selling. And then if throughout the day you did the reverse of the same thing, then you might cause weakness on Nasdaq. I'm trying to simplify this. I mean, it's not that simple. But what I mean is, if the big players are just adjusting their positions today, right? Price very, very well consolidate or chop around. Okay. Most of the time they start the expansions after the adjustment of their positions was already done. So currently we might see this might be just some players closing their short positions from yesterday, right? I mean, look at this. If really big players closing short positions around here, not buying, just closing the positions, we can easily see something like that. So I want to mention this. It's good to see that price is not taking out this level over here for the bullish sign, I guess. I mean, because if you just follow the structure, right? When it looks like this is our tableau, and we would like to see price taking sweeping this so we can take our entry. But if price does something like that, then this new low becomes our tableau, and we don't want to see this getting taken. And price does something like that, then this becomes the tableau. We don't want to see this one getting taken. And if price, this is a really rare occasion. This doesn't happen every day. Sometimes it happens. Today it happened again. This is a valid one too. So if price closes above this level and creates another long, I might scalp once again. Otherwise, I am on sidelines. I wanted to see price tapping this 200 SMA and taking out this one too. And reversing and giving a fractal sweep setup after the reversal. Price did not do that, so I'm just waiting. As you can see, price gives multiple opportunities. I mean, if you took this long setup, it would have, maybe it would have been a loss, maybe it would have been a winner. In today's example, it's a winner. But if you didn't take this winner, that's okay. There's another here. If you didn't take one, it's okay. There is this combo on ES over here, right? If you didn't take this one, maybe this one, I don't know, I'm not sure about this one. But after all, what matters is price is giving us multiple opportunities. There are always some setups, so being patient is extremely beneficial, extremely something good, because in hindsight this looks great, this looks amazing, right? But in reality this could have easily get stopped out. Price could have keep chopping around here and then reverse back higher. Price could have came near this level over here. Price might, I mean, this is not something price never does. Something like this could have been seen over here, and we could even see a bearish expansion, right? Those all were possibilities. I mean, when price was right here, there were many possibilities. And more possibilities is worse for us, because if there is only one possibility, then it means it is a 100% chance, right? One possibility equals 100%. This is something we would really want to have, but this is never the case. But let's say there are two possibilities, and let's say you kind of feel like it is 70 to 30%. Think something like that, right? Then you would want to bet on 70%, right? But what if there are 5 possibilities, let's say, and the let's say they are 30%, 20%, 10%. We are on 50, and next one 40%. Let's say 40%, and another 10%. Which one sounds better? If you take an action from here, the best possibility is this one. But if you take an action in here, the best possibility is this one. So we want to have less possibilities before we take an action. We see more possibilities around here. We see possibility of chop around here, possibility of keep going lower, possibility of turning back higher, many possibilities. But after we see that price is keep breaking lower, possibility for reversal and bearish expansion gets lower, right? Things like that. So that's why I wanted to wait a little more before I take my setup. Ooh, let me check the chat once again. Moneyglitch said he didn't take any trade today. Well, that's cool. If you are showing up without taking any trade, you are definitely on the right track. I'm waiting for price to take out protected lows on lower time frame. You are waiting for a bearish reversal. Okay. You are welcome. I think shit show is a pretty good name. Yeah, I guess so, because I don't know how exactly that model works, but I think it works pretty well on consolidating or choppy price section. So Chicho is a good name for that choppiness. Is weekend gaps by CTN indicator is created by you, as I could find it in TradingView community scripts. Yes, I created that indicator. I didn't complete it. sorry about my math. 20. Yes, it is. Sorry, I miscalculated, but you get the gist. Yeah, that indicator created by me. I did create it, and I will publish it later after I complete after I done it. I mean, after everything is completed, I will share it. I will also make a video about the weekend gaps. I believe these levels are really good levels. I mean, look at this. I can't tell you the amount of times I saw this thing over here. I mean, for a while I just trading the SPS idea like that. Idea would be price tap in here, something like that. Just give me a second. Price coming back lower, making a swing high, tapping this one and reversing back higher, breaking this last high over there, and then retracement higher high. I would always take this scalp long. Just trading this pattern and nothing else. For a while I did this. But I don't remember what happened then because I was taking too many setups, too many ideas. I wasn't trading like this. I wasn't patient. I was clicking everything. For example, after seeing this, I would just look at this and I would click sell and I would say, let me see if this goes back to this gap over here. Things like that. Sometimes it would, sometimes it wouldn't. So I was trading like a degenerate gambler. Right now I don't do that anymore. But I believe this is still a good setup example. Price is bouncing from the weekly gap properly, breaking out, leaving a tap, sweeping the tap, keep going higher. Even if you don't take this one, the second one was another opportunity. I have been observing these gaps for the last 3 years. I first saw these gaps on ICT 23 mentorship, but he didn't teach the nuances exactly. He just mentioned the gaps, and from time to time he showed things like that. Look at this, worked as a support. Didn't give a proper blueprint for that. And when these things first appeared on ICT's videos, they became extremely popular on Twitter. Everybody was talking about NVOX and NDOX, but this one, let me write NVOX here. It was once very popular, then everyone forgot it. Some ICT traders still use it. I believe this is one of the things that ICT rebranded. I believe this weekend gap concept was being used by traders before ICT was even born. I will explain the details about it in my video. I'm gonna get a little water right now. My throat is getting dry. Alright, I'm back. What do you guys think about this price action? Man, the amount of funded accounts that I have blown during this kind of price action. Let me go back to ES. Where does this? Ah, this is not a gap. It's just an imbalance on 15-minute chart. Imbalance over here. This is another bullish sign, price tapping the imbalance, coming back lower but not closing too bearish, leaving wicks behind, tapping again, leaving wicks. A 15-minute closure inside this imbalance might lead price to this level over here. It's high. I don't know. I don't exactly know what happens next, but feels like they might be just slow grind upwards movement. If this keeps going lower, I might look for a long opportunity with a fractal sweep, something like that, or maybe something like that. I don't know. Oh, just like this one. If this comes back lower, I'm not sure if it is going to come back lower. Maybe it is not going to come back lower. Maybe it might keep going. I want to track the highs and lows. A low, higher low, higher high, higher low, another higher high, another higher low. A failed swing over here. Price couldn't take this one, so another higher high, higher low here, and sweep. No closure. Range is not left yet. Come back lower. If price closes above here, then this will be an established low too. So let's see what happens. Currently it looks bullish. I wouldn't look for a short setup unless I see a bearish reversal. I took just a little one. I avoided this ES setup combo over here on my funded account. Maybe I could have taken this one. This is also this one over here, an example of the market liquidity cycle setup. The setup I mentioned on my YouTube video. This video I'm talking about. Give me a second. Your channel. This one. The logic is pretty much the same. We got a clean consolidation area over here. Little area. Got this box. Price breaks above with an imbalance and keeps going higher. Leaves a tap. This is our consolidation range. This is almost same with exactly the same with SPS. Almost same. The only difference is SPS utilizes the swing points. Okay. This model utilizes consolidation areas instead of swing points. I mean, in my opinion, in my perspective, this high and this high, for example, is not the same. Okay. This is a swing high too, and this is a breakout. Let's say price left multiple imbalances, or price broke above and keep going higher, like that, or broke above and started consolidating here. which means establishing a new range for itself. I mean, this is a breakout, right? This is a breakout too. This is another breakout. These two are not same in my perspective, because I believe if price is not trending, I mean, if it is not continuing somewhere, if it doesn't have a target, then this level might not hold the price. I mean, for example, I would take this SBS setup. This would be a nice setup, but I would be very cautious about this. Okay? But if I see a nice consolidation area over here, and the tap above here, then I wouldn't be so scared if I see something like that. How did I end up with this consolidation stuff? Let me explain that one too. I was constantly driving the tap low levels, right? This is a tap low. This is a tap low. There are a lot of tap lows on chart. I was just constantly marking them. For example, this is a tap low. Many of them, this is a tap low, this is a tap low. If price didn't sweep it, then it is a tap low, right? I was getting confused and I was trying to find the best tap low so I can find the best setup, right? I was actually doing what everyone else doing. I was just trying to find the best liquidity point. So I was focused on that. I was just constantly looking and searching for patterns, and then I noticed that this is something nice. This place becomes a nice level, nice liquidity pool. And I saw some differences between this one and this one. I saw that this move origin over here, this original volume node or old consolidation, original consolidation, whatever you want to call it, it's all the same. This most of the time gives more reaction to price. When price comes back, it has got more tendency to either reverse from this level or just make a bounce that is enough to give a scalp. So I believe these two are not the same, right? So this is how I ended up with the market liquidity cycle idea and idea of using consolidations for market structure breaks instead of the standard swing points. Okay, I mean, most of the reversals doesn't just happen from a swing point. They teach us like that. Price goes like that, and this is the reversal over here. They teach us like that, right? They say this is the market structure break and price keeps going higher. But does it really happen like that? Did you try to catch a reversal like that? Did you experience what happened during this kind of price action? I mean, which one is more common? This kind of reversal or this kind of one? Which one is more often? I believe this one is a lot more often. So if I see a solid consolidation area and if I see that price is leaving this area away, I call this a market structure break, not just simple single swing point is being broken. I mean, if you think of it like the way ICT teaches, this is the market structure break, right? Most of the ICT models work like that, right? This is the liquidity. Price sweeps the liquidity over here, and this is also a liquidity. liquidity taken, low broken, fair value gap is formed, right? Sell here. What happens then? This happens. Because why did we get stopped out? Well, because we tried to determine the market structure, tried to understand the market structure like a rote memorizer. I mean, we cannot simply apply any kind of rule to market. We need the context, right? So I don't know how to describe it, but instead of just trying to memorize something and apply it every single conditions, every single market conditions, I try to use context, right? For example, we zoom out and look at the higher time frame. I wouldn't dare to call this a market structure break. But if the same exact pattern was not here and it was here, right? Then it would have been different. The context is much more important than memorizing some stuff. Oh, this law is broken, it is bearish. No, it's not that simple. It is simple, but it is not simple. It is difficult without the context beyond it. And context is why the current price condition. And I believe it is not really too difficult to understand this context, right? It's actually simple. It's just consolidating on higher time frames. It tapped a lower levels, cheap levels on higher time frame, right? It bounced from there. So the market structure, the 1 minute market structure breaks after that is unreliable. Doesn't matter what pattern price drops, doesn't matter which level price takes out, right? Doesn't matter which mentorship price action occurs. Things like that. So instead of calling this a bad price action, I can just work hard to understand the underlying context, manage my expectations, and manage my behaviors based on that context, and just simply adjust myself and take the small win or small loss instead of blowing the accounts and chill out. Because there will be days like this again and again. And the more experience I gain, the more experience I accumulate about understanding this underlying context of price action, I will get much better at reading this context. And if I get much better reading this context, I will learn to size up here, carry it more. I was scalping all the time. I would never carry a position more than 100 points. Even 100 points was something huge for me, right? I would take 20, 40, 50 points and I would be done. I would immediately click close, close, close. Yeah. But yesterday I just wanted to experience it. The size didn't matter. The money, nothing mattered. I just wanted to feel that experience of following this price action, following this retracement, seeing that profit is getting lower and observing this expansion. And on this day, we ended up with 250 point expansion, right? It was something like that. Entry was around this level and exit was over here. We simply carried the position until we saw a white candle. And look at this. And if I did carry it further, look at this. So I'm really focused on acquiring the skill, because if I can build the habits I want to build, if I get the skills I want to get, I will become an amazing trader. And I believe anyone can do this. It's all about neuroplasticity. Human brain is extremely flexible and extremely resilient. It can physically change itself. No other animals have this ability as much as humans has. So I believe identity is not something rigid, is not something changeable. If you believe that you are a certain thing and you can never change, then your brain rewires itself based on that belief. If you say, I'm stupid and I cannot change, then your brain says, okay, we are stupid and we cannot change, and then changes itself to that state of being, right? But if you understand what is the neuroplasticity, what what it does and how it works, then you can understand that every human, doesn't matter, the age doesn't matter. Every human has got a flexible brain, flexible nervous system, and if you change it, then you can become anyone you want. Anyone. You can be the one of the greatest traders in the world. You can be the one of the greatest pimps in the world. I don't know. Whatever you want to be. You can be a politician, you can be a artist, but it is not that easy, because you have to do some constant deliberate practice. I mean, it was like going to the gym. You go to the gym, you do one rep, your brain changes the shape of the muscle, but also changes the shape of itself. And next time, your brain makes that rep a little bit easier. And the more you rep you put in, the more your brain rewires itself, right? And the more you become, you are become the person you are trying to become. So it would be really so difficult to turn into someone you actually wouldn't like, because you would have to deliberately do something you don't like constantly, and it's near impossible. But if you are trying to become someone you would like, I mean, if the deliberate practice that is necessary is something you like to do, then it becomes a lot easier. I mean, I like to do this technical analysis. I like to do this practice. I like to journal. I like to observe price action. I'm always curious what it is about to next, what it is going to do next. So that curiosity is one of my biggest edge, because I really get excited whenever, no matter what price does, I get excited, because price would be feeding my curiosity. I currently don't know if it is going to break lower. If it breaks lower, I would get excited. I would like to see that, because, well, I didn't know if it was going to happen, and I would be happy to see that it's happening. And it applies for the same logic, reverse logic. If it keeps expanding higher, I would still get excited, right? That curiosity is a great edge for a trader. At least that's what I believe, because you love receiving data, you love receiving information, and I believe every human being has that curiosity inside of them. What kills that curiosity is expecting too much external validation, focusing the outcome too much, maybe the anxiety that's come from it, right? If you don't really care about what anyone thinks, what you make from trading, if you forget everything and just curiously look what price is doing, you are becoming a lot more receiving towards the information. You learn a lot faster, you improve yourself faster, you become more objective about your own perspective. So if there is something is not working properly, you can easily detect it and change it. You see what I am describing, right? I am just describing a curiosity-based pure flexibility. When you do all of this, you notice that at some point you start to flow with the price. You accept its own flow and you submit to it. You always be patient because, well, you are curious and you're wanting to see what's gonna happen next. That increases the patience. At least it did increase for me. And in order to be able to do all of this, I believe we shouldn't be in an anxious state. I mean, if we are feeling anxious, this gets more difficult to apply. And the best way to avoid that anxious feeling, that anxiety, is just not taking risk for a while. I mean, if you are constantly blowing accounts, if you are feeling anxious, if trading makes you feel frustrated, then you can just simply stop taking risk. That's why I am not taking too much of risks for the last month. That's why I I blow my accounts on, I guess, this day, last couple of days of January. I blown my last 3 accounts. After I blew them, I told myself, okay, I gotta go back to paper trading. But I easily get bored when I start paper trading. What should I do? Ah, no, this is when I blew the account. Yes, this is this. And when I got bored, I would just keep clicking, and that clicking was really a harmful thing for me. So I think this live stream is helping me a lot, and I plan to keep doing that. I will probably keep doing that throughout this year, every day, probably including weekends too. Do you guys have any questions? Feel free to ask them if you have any. Look at this hourly chart on ES. Came near close to this nice consolidation area. If you follow the structure, you can easily see this one. This is a nice consolidation area, right? And this was the first tap low towards the consolidation area, first retracement. Price swept it a couple of times, made the highest high. As soon as price made the last high, the last low that created that high becomes the new liquidity. I mean, if price broke above this level and then left another tap and then made a higher high, then I would want to see this staying protected, but the idea is really simple. When price does that, the last low is the liquidity. When price sweeps it, goes higher, we want to this becomes the new liquidity. But if price creates another liquidity over here, then we want to see this protected, and this becomes the liquidity. It's just that simple. Let's see if price wants to tap this one. I was talking about this one, a consolidation area over here. If you look at the bigger picture, it looks like this. So, and if we check this area over here, right? Something like that. Right? The new origin. And price came back to that origin. That doesn't guarantee a bullish expansion, right? Because price might want to sweep a couple more lows next week. We don't know yet. Next week is going to show us what price wants to do next, right? Just because price came to these bullish levels doesn't mean price has to constantly keep expanding. I mean, it already took the reaction. Might do something like that, right? Something like that. I don't know, and I don't care. What I care is I can capitalize on these levels by using my multi-time frame analysis and my levels. Right now it looks like it might be coming back to this level over here. And I wouldn't be longing from here immediately, because that would be something like a knife catching the falling knife, even though this would work as a proper support level. I wouldn't rush for any longs. Not looking for shorts either, because I'm not very good at mean reversion trades. Sometimes I take, but not very often. So no shorts or no longs here. This is just another waiting zone. I mean, I waited for quite a bit. I waited for a really long time. I started this session around 9:40, I guess. I don't exactly remember, but since the open, let me check this one. 2 hours. It's been 2 hours. But still, I was able to find more than one setups, right? These setups for ES and maybe these possible ones. I mean, inside of a day like this, 2 setup is not something little. It's actually plenty of setups. 2 setups in a single day is, I believe, is plenty. So I feel like it's not necessary to be rushing. Yesterday there were plenty of setups once again. This one was the one we took, and we took a little scalp over here right before price reversed. Our exit was around here, and price reversed back higher. We were talking about the possibility of price coming back to this level. If you zoom in really close, there are another little SPS opportunities, but these were really ugly. I didn't take any of them. And I closed the session, but I believe this was another closure of this candlestick, for example. Or maybe Look at this like that. This is a tap high. This is a tap high. This is the beginning of the complex retracement. Price is looking like going lower, but making new highs. Small by with small movements like that. Making fake reversals lower, then sweeping again. But if you look at the weekly gap levels, it looks pretty clean, I guess. So this might be a nice sell setup until this low. And maybe this one could be a nice setup. This is probably the SPS setup on lower time frames. Something like that could be nice. As you can see, there are plenty of setups, many of them. And if you zoom out, you see that price already took out previous day low, already accumulated below the weekly open level, created this consolidation area over here, came back to that consolidation area, swept the high, and made a complex retracement. After complex retracement, it made the fractal reversal over here by breaking above this consolidation area, right? So this could be a long over here, a breakout long, but breakout of the fractal, not the whole range. So you see also right at the simple moving average crossover, there is a fractal sweep setup or combo SPS, and another one here. You see there are many setup opportunities in a single day, and that's why I believe we should have an abundance mindset. So if there are many setups in a single day, why should rush? Why should risk losing the bullets you have for a single day? Or why should risk over trading and blowing your account? Just simply wait. Maybe see one or two working properly, then take another one, right? So that's the reason I am doing my best to learn patience. And it's really weird because it is really too hard to learn that patience when you are trading alone by yourself. I mean, if I was sitting in front of this chart and telling myself to be patient, it would be really difficult to be patient. But when I talk to you and I tell you I want to be patient or I need to be patient, it gets really easier. I don't know. It is probably has probably something to do with psychology or philosophy. I don't know, but I recommend you to finding something like that too. I mean, you don't have to live stream obviously, but just make some experiments, right? Especially if you have problems with like over trading, maybe I don't know, over leveraging, right? Try different stuff. I mean, don't try to do the same exact thing over and over again. Because if you cannot solve a problem, then that means you most definitely should try a different approach or try to get a different angle, look at the things from a different perspective. I want to check gold. Wow. All right, pretty boy. That looks nice. Just give me a second. I just want to see what it did. These are the this kind of stuff is I be cautious when I try to long. I mean, imagine a 1 minute SPS long setup. This is a 15-minute chart. For example, the SPS setups that you took from these levels is much more difficult than you might take right now, especially if it is 1 minute. On 15-minute, it took some place. It looks like it might be coming back. I don't know how further it will. It might keep going back higher, might do something like that, or complete reversal. I don't know. Might want to do something like that and go back higher, because this is a range, as you can see, and price just took the range high. So when price is looking like that, I wouldn't long this on lower time frames. After this sweep, I would be cautious for longs. These are pre-market. This is the where price took out a low, and I'm trying to understand the structure. This looks interesting. Nah, man, this looks difficult to trade, I guess. Let's go back to the indices, the thing that I know better. Actually, this doesn't look bad. I just noticed this thing. I mean, if we call this a tap low, a liquidity point, price didn't take out this high yet and took this. This looks like another combo setup, especially going after this one, because already established. It would be already established the failed swing, a higher low, and break above it. I don't know. This setup looks cool, I guess. Maybe something like that. Just like the one over here. We tried this one just to get the experience, and this is the same exact setup once again. It barely hit 2R. I mean, during this kind of price action, I would either exit from highs or take partials from highs, or I mean, if I'm going to leave a runner, it would be just one micro. It would be a small runner. I wouldn't leave a big runner inside of this kind of price action, because there is a really high probability to see that price is coming back to take your break even, or maybe even stop loss. So in today's example, it come back to take our break even. For copy trading, what tool do you use, bro? I need it for my friend. I currently do not use copy trading. I just create one account. So, and when I was trading with NinjaTrader before, I was taking different trades from different accounts. I had, for example, if I have 6 accounts, I would take 6 trades from each account. So, and during when I was trading with Project X, that platform had got the copy trader inside of it. So I don't really know much about copy trading. But if I think he should look for something more popular. I guess some trader recommended. I don't know, some traders were recommending this one, but I'm not sure. I don't know. He should do his own research for the copy trading. I want to try something different over here. Just for the sake of it. I will open one micro. Mean reversion. Short setup. Just to feel the experience.
Order submitted.
Just stop below this level. Let me see. Oh, I will make it 2 micro.
Order
To
submitted.
take the partial 2. Just stop loss will be tight on this level. Right above this high. I'm just curious, you know. Price has been chopping a lot and failed to make a new high.
Order
And
filled.
close below the low. Let me place my stop loss first. Stop market.
Order submitted. Order
Book them.
submitted.
What is the size? 13. It's like 20 point stop loss. So one partial on 20 point profits. Let's see what happens. Around here.
Order submitted.
I mean, it's been a choppy day and price couldn't make a new high and price closed below this low. And even if it is going to go higher, I am curious to see if it is going to come back to these levels, maybe sweep this one, right? And then turn back higher, or I don't know, I just wanted to learn something new with a low risk. If price takes out this level, this will be a risk-free trial. Or I can even make it risk-free just like that.
Order
Take
filled.
the partial, trail the stop a little, right?
Order cancelled.
It would have still taken the partial. Just experimenting. Now I think it is risk-free. I didn't try to force anything. I didn't try to catch a reversal or something. I just tried a little mean reversion inside of the range. So if this keeps going lower, I get more profits. If it doesn't, I would get the experience, right? Kinda seems like it keeps going higher, but oh yes, looks a lot different than Nasdaq. It is the weaker pair once again, and let me track these swings over here. This is actually a complex retracement.
Order filled.
Yeah, ES seems like it is giving another combo, another setup over here. Something like that. Now it's been almost 3 hours, and I feel like we came to the lunch, and I feel like I am getting a little tired. I mean, at this point, it wouldn't be too ideal to keep trading, because the more we stay in the markets, the more risk exposure we get, the more we expose ourselves towards the risk. This time it didn't take the entry, left a little imbalance over here. It doesn't really matter. If it took the short setup on ES, would it be 2 hours? Almost, I guess. No, it didn't hit the 2 hour. Just let me check it. Yeah, it almost hit the 2 hour. I don't know. Without slippage, if it would be 2 hours, it doesn't matter. Just wanted to see it. By the way, I believe price still might wanna test this level. I think I should close this session over here. We observed 2 winning trades and 1 break-even short setup. It was an internal SPS short setup after price failed to make a new high, closed below this low, and came back to sweep this high. This could have been a deeper retracement, just like it was on the ES. This could have been a reversal either, I don't know. But price chose to go back higher. It seems like price might be targeting this level. This is the weekend gap of current week. I mean, pretty much what it does, right? Gap to gap. It is going back and forth. Oh, look at these candles, man. Alright, I will try one last short setup over here. Price didn't take out this high, but took this one. This is the last setup I try, and after this one, I am gonna
Order submitted.
end this live session.
Order submitted.
Get some snack, go to the gym. But
Order
give me a
canceled.
second. I wanna take it like this.
Order submitted. Order
two.
submitted.
Alright. Oh, price already took this level. Okay, let me.
Order filled.
Okay. Yeah, stop loss is pretty tight. Let me see what it does. Let me see if this keeps breaking higher, or if this coming back to these lows over here. Since this is lunch, price might surprise us. Price might actually stop this consolidation over here and decide to keep breaking higher. That kind of things might happen during a consolidating slow price like that. I mean, chop through the AM, start the expanding on lunch, and maybe chop again on PM session, or maybe reverse. I don't know, things like that. I think it is taking the stop loss. 8 points is not too much. I'm leaving the stop over here, just right here. My total stop loss is 25 points. One more tick. This is the last setup for today. Price swept this failed swing too. That's why I didn't want to leave the stop loss here. And wanted to leave it instead of here because 8 points is just $30. My stop was already big enough. I mean, it had already room. If price takes out this high, then I will
Stop
be done for
filled.
today. Okay. Took the stop. Came back to break even. The more time we are in the markets, the more risk it is. Then how to trade on CFD markets, prop firms. I couldn't understand the question. Can you rephrase it? What exactly you are asking? I mean, if you are asking that when we are going to trade them, you can cycle them easily. I mean, yes. Yes. I did that before once again on my session and it got stopped out again. But in order to understand the dynamics of mean reversions or these choppy price sections, I try things like that from time to time. I mean, I would never risk real money on these setups. I would probably, maybe I shouldn't have taken that risk, but I don't know. I think the more time I spend on the charts, the more it creates some kind of hallucination or some kind of illusion. It's like drawing you to itself. I mean, the more time I spent in front of the chart, because I'm scalping and I'm following the 1 minute candlesticks, and my brain is perceiving a lot of information, a lot of data, and that data is constantly changing. I mean, when price is looking like that, my brain gets curious if it's going to do something like that, or something like that, or something like that, or keep expanding lower. Things like that. So I tried a mean reversion idea. It didn't play out. It was a scalp idea actually. And I believe these scalp setups are not really the optimal setups. I mean, if maybe this was a nice lesson for me too, right? I mean, what I was going to do? I was going to take a partial from this level. Didn't even be able to. I wasn't even be able to leave a proper runner, right? Tried one here, just one partial, and then came back. Maybe price is going to do that deep retracement after I got stopped out. I don't know. Price already tapped this level. So maybe I shouldn't have taken this one, but being honest about this kind of stuff, unlike features, CFD takes more time to form SPS setups, right, bro? Okay, by CFD, I think you mean higher time frames. I mean, it's possible to trade this on CFD too. CFD doesn't mean you can't scalp. For example, you can take this kind of setups. I mean, I did scalp 1 minute chart before CFD. With CFD, I mean. But if you are asking me about the CFD prop firms, there is something about CFD prop firms. First of all, they got slippage and spread, also hidden spread, most of them. And most of the prop firms doesn't like scalpers. I mean, if you are able to make too many percent in a short duration, they try to ban you, they try to change your rules, they try to make things harder for you. Yeah, Pfeiffer's is good, but yeah, Pfeiffer's is good for scalpers either, but still, if you make too much money in short amount of time, don't take everything I say seriously. I joke most of the time, lol. Well, but I believe you pointed on a great point. I mean, I guess I was reflecting on something that was really valuable. I mean, you made me think about the trades I took on the past. I really realized, or I remembered the times I get tilted. I mean, if I was alone and if I wasn't in this live stream, maybe I could have feel tilted around here, because I remember that taking a short setup like this one, getting stopped out, after the stopped out, getting tilted and turning to long and stopped out on longs again, and turning back to shorts maybe on this level, maybe taking profits, maybe not, but the worst thing is getting profits out after getting tilted. This was something I experienced many times. I would get tilted. For example, I would target a 500 bucks. Let's say my target profit would be 500. I would target 500 bucks, but I would get tilted after tilt. I would over leverage after over leverage. I would get, for example, 3 times of my target. I think this was what ruined my consistency, because I had a good run. I was consistently profitable for about a year. I was managing risk intuitively. Most of the things I learned by myself. I mean, obviously, I learned the structure, etc., from Stoic Trader, but trading is like that. You have to learn most stuff by yourselves. And this actually ruined me, because let's say every time I get tilted, I would lose money. If every time I tilted, I lost money, I would eventually stop doing that particular thing, right? But from time to time, getting a big winner from a wrong behavior um, creates the same effect with the slot machines, and that eventually creates gambling addiction. Price actually created a nice mean reversion, but after the weekly gap. I mean, yeah, it might be a joke, but I believe it still had a value in it. It was a nice reflection. So thank you for it. It's been almost 3 hours. From now on, looking at charts wouldn't be so good for me. my performance, I can feel that my performance is getting lower. So I am closing this session over here. I think closing a session in break-even is a success for me too, because this is something I am doing for the first time for my entire trading career. I had never did something like that. I mean, take a small profit, lose it back, and close the day break-even. I never did that before. I was stubborn as hell. I would constantly keep trading, keep risking, and I would never stop without revenge trading and taking that profit back and even more. And in the short term, I was able to take that profits most of the time, but in the long term, it created bad habits, unprofitable habits, and that almost ruined my trading career. So I'm currently choosing discipline and teaching my brain something new, showing my brain that, hey, brain, look, we can do this. We can make some win, lose it back, and eventually close the day on break even, just like we promised ourselves, right? I promised ourselves that this was my last setup and I wouldn't take any setup again. And I kept that promise towards myself. And the more I keep, the more I do this, the more I repeat this, the more I get used to keeping the promises, to the promises that I give to myself. And the more I get used to it, and eventually it turns into a habit, and that habit turns into identity, and eventually I wouldn't be any problems keeping the promises I gave to myself, right? That's how our brain learns stuff. So thank you for joining this session and participating it in the chat. I really appreciate it. I plan to do another one on tomorrow, just to evaluate the trades that we took, the things we did, maybe some nice setups we didn't take or we didn't see, right? And what could we do to improve ourselves, things like that. It would be like a study session and maybe a journaling session, evaluating our live sessions, live streams. So I will see you guys tomorrow. I would probably do the session on the same time, maybe on later in the night. I don't know. I will let you guys know. So I will see you tomorrow. Thank you for everything. Have a great weekend ahead.